Hey everyone, it's Evan here from the Trade Risk on Tuesday, May 22nd, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So as you probably know, we like to start off these videos looking at a weekly time frame, give us that big picture perspective. This is the S&P 500. It's the cash market. Each bar on this chart represents 1 week worth of trading. And we can see it is only Tuesday, but we are up about 0.5% here on the week. But if we look at this candle here, that's printing so far. It's only been 2 days worth of trading, but you can see we got this nice little tail on top, and we sort of failed right at last week's highs here in the S&P 500, and we are back to the lows of the week, and we currently kind of closed out the session here on Tuesday, going out on the lows of this week, exactly where we opened. We kicked off the week with a gap higher, and now we kind of tried to push higher, we failed, and now we're coming back down to those opening Monday prices. So other than that, not much has changed here on the weekly time frame. We've seen ranges sort of compress a little bit, move sideways, or volatility kind of compress a little bit and move sideways, and we're kind of waiting to see how we end up resolving last week's quieter range. So we really started compressing last week, and we're seeing some more kind of compression or range-bound choppy behavior into this week so far. Volume's been pretty light. So really, that is the only comment I have here on the weekly time frame. Not much has changed. We're still above rising 8 and 20 period moving averages. They're not aggressively rising, indicating there's not a ton of momentum wound up here on the weekly chart, but they are still bullishly aligned, and price is above it. So let us go down to a daily chart now, where things get a little more interesting. We'll switch over to the SPY ETF now. And this is a daily time frame, and what we can see is now we have a sort of clear range that we've been working with over the past 6 or so sessions, down to about 270 and change, all the way up to about 274 and a quarter, give or take. Over the past 2 sessions, we got up to that price, and last Monday we got as high as 274.08. So we're seeing this kind of mean reverting market up around 274. We tend to sell off. We see sellers kind of come in, and then as we get down to this 270, the lower 270s, kind of like we saw last Tuesday and last Wednesday and last Friday, we start to see dip buyers kind of step in at the bottom end of this range. So this is, especially for the active traders here, the most interesting kind of near-term levels to pay attention to in the SPY. We're talking about 270 to 274, and the sort of significance of this consolidation, though, is of still some pretty great importance, some significant importance, because if we zoom out just a little bit here, we can see that this 270 zone here, 270 to 271, has played a pretty critical kind of influential point of control, if you will. We've pivoted off of here several times in the past. We found support, we've hit resistance at this level. So losing the bottom end of this range does kind of date back over the past couple of months as being pretty significant. And also right under that, we have this trend line that extends from the highs that kind of comes in. Of course, it's sloping downward here, but it is south of this 270 level, and presumably if we started to break down below 270, we would lose these moving averages, lose this horizontal level, and we would very quickly start to challenge the old trend line that we just recently broke out of about a week and a half ago. So the support here, even though it is kind of short-term in nature, it does line up with some more sort of intermediate term consequences, if you will. So I do think this 270 to 271 zone is fairly high stakes, and we want to see us hold above it on a closing basis. We could get a brief test below it, an undercut below it, but we really want to pay attention, at least I like to pay attention to the closing prices to see where we finish off the trading day. And if we do get a close below 270, that, of course, would not bode well for the immediate term. On the flip side, we are still hanging around at the upper end of this range, right? We are above the top. We're in the top half of this shorter term consolidation. We did finish off near the lows here. We do have sort of a gap to fill, I believe, down below in some of these indices, but we are still closer to the highs. And if we can start to get a move above 274, I think that the level now is pretty clear because we tested it on today's highs, we tested it yesterday's highs, and then all the way back here on Monday, we just keep banging our head against right around 274 or so. So that is the breakout level. If we want to see a new momentum surge back into this market, if we want to see that bull case ignited again with perhaps a second leg higher, that is the level we're going to want to see taken out. So I think for you short to, even intermediate term traders, 270 to 274, that's a tight range, only about a 1.5% or so. But those are sort of the near-term levels that I would be paying attention to in the S&P 500. So that that I think is really all I have to say about this chart here. We've seen volume, pretty light over the past week or so of trading. So it's always more interesting to see if we can get a high volume breakout or a high volume breakdown to give us a little more confidence in that potential start of a new move. So that's also something that we will want to pay attention to. So that is the S&P 500. Let's go to the IWM here, and this has been kind of the darling for the bull case now. This has been ripping higher pretty much effortlessly, really not seeing any significant selling pressure. It's up, I think it's up about 11 out of the last 13 sessions. If I eyeball this, I could be wrong. I'm not going to count them, but it's been up a lot, as you can see here, almost in a consecutive straight line. But today we did get a bearish engulfing day. Volume was very light, so we don't necessarily make a ton of it just now. But if you're strictly a price action trader and focusing on price the most, then today is perhaps meaningful to you if you do also pay attention to these daily bars. And now you can see here we did sell off. We did kind of move right to the slope, if you will, of this recent leg higher here. So we do have a bearish engulfing bar after a significant kind of move higher. We are coming to this uptrend line that has been supporting price, or is kind of showing the slope of this move. So perhaps some dip buyers step in tomorrow above the 8 period and around this trend line. But if we do start to accelerate lower, higher volume, get that follow through lower, then again, that gives us some pause on the market, and we really want to be paying attention to, I think this board is actually a little more annotated, sorry about that, this level right here, right around 160 or so. That's going to be the big intermediate term level that we want to see the IWM stay above. So given the fact that it has been up, say, almost a dozen days in a row here, I think a pullback even to 160 or so is totally reasonable. It's only about a % or so in the IWM. So realistically, a 2 or 3 day pullback to retest this breakout is totally reasonable. So let's see if that happens. If we come slamming down into it, if we see, volume start to surge, if we see some nasty gap down, if we see more erratic price behavior on this test or on a cut through, that would not be ideal to me. But again, another session or two like today on lighter volume, pulling back to retest 160, totally, again, reasonable and in the cards, and I think would be completely fine. So that's the Russell. Finally, the Qs here really seem to have stalled out and just moving sideways. Volume once again drying up here. Doesn't seem to be just a whole lot of movement or interest in the Qs up around these upper 160 levels. We did manage to fill the gap over here last Monday up north of 170. Then we since have pulled off and have really been consolidating in an even tighter range than the S&P 500, just moving between 167 up to 169 or so. So really about less than 1% movement here over the past 5 days of trading for the Qs. That's pretty darn tight, and I would not expect the market to stay this tight for much longer. So we would see, we should expect to see some volatility expansion perhaps later this week. And again, I'd be paying attention to the levels here north of 170 and then below these recent lows around 167 or so. So that's the landscape overall. I think some mixed signals here, but overall, I think you got to still give credit structurally to the bulls here. They are above in most of these major averages, above rising fast-moving averages. I like the 8 and 20 period moving averages. The trends in the short term are still remaining higher, but we have seen momentum kind of come to a little bit of a halt, or at least downgrading on this up move, and we are seeing a little more two-way trading. We get the bearish engulfing bar in the near term on the Russell. So there are some mixed signals there in the very, very short term. Structurally, overall, bigger picture, the bulls, it is still their game to lose. So that is the market overall. Let's get into some of the other major markets here. We'll go to TLT first. If we go to the weekly chart, you can see we're roughly flat here. We talked about the significance of this bounce higher last week. So we undercut 117, which has been a pretty critical level going all the way back several years, in fact. And you can see we are still trying to base out above it after, last Friday's high volume kind of move north of 117 again. So it's in the bulls' best interest for TLT, for the bond bulls, to hold this level. If we start to roll over here again, it could get pretty ugly as we are starting to break multi-month and multi-year support. So something to pay attention to. Mean reversion traders going to be, wanting to pay attention to support here for potential bounce, for, a bigger bounce back into this old range. And you breakout momentum traders are probably going to be looking for a rollover here and move out underneath this 117 for potential trend continuation. USO is next, and you can see this one here finally getting a little bit of a down move here. Again, oil has been just kind of climbing higher here. Lots of good volume to the upside. Trend has remained fairly resilient. We saw a slight increase in volume today, kind of hitting our 20-day average, and it did come after an outside bearish reversal day. We closed the session here on the lows, and we failed to get above and continue on to yesterday's move higher, almost 1.6, almost 2%, 1.66% to the upside. Yesterday failed to add to those gains and reversed a bit. So oil maybe today marks some type of multi-day pullback that we'll see here, maybe back to the lower end of this range, down around 14.25. It's had a tremendous run. We've talked about it. The trend has persisted, though. We haven't seen any, violent trend breaks. Even this session right here, which did have a tremendous amount of volume, we did see by the close of the session here, bulls managed to reclaim all of the intraday damage. So we really want to see some support broken before we get aggressive, but maybe today's a early sort of aggressive day one, reversal or indication of more of a pullback. So that's oil there, and natural gas here finally starting to break loose from some of this recent chop out of this recent channel here. We've talked about if you go back multiple months here, the UNG ETF doesn't do the natural gas underlying contract justice, as there is some slippage here. We are even previously before today's move were above this March pivot here, but it is nice to see natural gas starting to get more trendiness to it, trying to get more of a clean kind of ebbs and flows to the upside. Be nice to get multi-day runs higher, a couple of day pullback, and start a more meaningful uptrend back up to say the $27, looking out long term, of course, back up to these old highs here from August and late 2017. So natural gas bulls, congratulations for holding on. Tried to play that reversal myself in here once or twice and just ended up taking some small losses and not sticking with this, but it does look to be emerging now. So it'll be interesting to see if we get this in play now more to the upside in the near term future. So good on the natural gas bulls. And then finally, metals here. Gold is still pretty much just kind of dead money here, sleeping right on this fairly significant trend line. Again, it's arguably not drawn so well on my chart, but you can see there is some, slope significance here from the rally that started back in 2017. This gap here, of course, on the GLD ETF still in play. Ranges have compressed here, so it'll be interesting to see the next move for gold. If we start to take out 122 or so to the downside, then certainly look out below. But I still want to see if we can get back above here, and then to reclaim sort of my bullish stance. I'd like to see us back above 124, reclaiming this old year-to-date support. That'd be the ideal scenario for me to get back in the bull case. And meanwhile, silver is sort of doing what it's supposed to do for a bullish metal scenario. It is outperforming. It did hold on to these lows. It never had the fierce breakdown like gold did, and it's now in fact back up to the midpoint of this range. So it is still in this sideways channel. It is pretty much been asleep here since February, trading between 15 and a quarter up to about 15.90 or so, $16 with a brief breakout. But otherwise, we're still kind of waiting for the more intermediate term direction to unfold in silver, and it seems as though we still have some more time to wait. So something to keep on your watch list, but doesn't look too actionable right here in the center of its range. So that is what I have for this week's midweek video. Hopefully you guys are doing well out there. Thank you so much for watching this video, for those of you who get through all of them. And if you're new here, do consider subscribing to our YouTube channel. All it does is keep you up to date with all of the latest videos that we publish Tuesdays and Fridays on recaps, and try and do Wednesday with some individual stock analysis. So that's all from me. Thanks so much, and I will talk to you tomorrow.